Good morning, this is Mayor Valensky with Driving Markets. I hope you're all well. I'm stationary in the traffic at the moment, so don't worry about it because a lot of viewers get scared that I'm driving and then what happens is that I'm going to have a crash. No, what happens when the traffic moves, then I put on pause and then continue when the traffic stops. So I'm not going to endanger myself or anyone else by having a cardiac watching me driving in the morning. Okay, so this morning overnight markets are down. The Dow is down more than 300 points, with the Nasdaq down more than 150 points, and the S&P following on with Germany, UK, Far East. All markets are down, including crypto. So let's go a little bit into detail on that. The markets are down, continuation of the fear factor. Again, if you remember from last Wednesday evening, when the Fed increased rates by 50 basis points, there was euphoria. The markets just shot up. They were so relieved because the Fed said they're not going to increase rates by 75 basis points. However, the next day the market sold off on Thursday, sold off on Friday, and now it's sold off last night. They just simply don't like the state of the economy. What's likely to happen in their view is that inflation will continue rising, and what's going to happen with rising inflation, you're going to have rising interest rates, but this could lead on to recession. So the markets are taking that into account and they're just selling off. The sector that's most affected and the biggest victim, as I've said over and over again, is the high-tech sector. And on Friday, all the high-tech sector were down 3 to 4%, whether it's Moderna, CRM, Google, Salesforce, Tesla. Apple also came down a bit, even though Apple makes huge profits and pays out a dividend and is going to do a share buyback program. Apple is one of the two constituents with Microsoft that make up more than 25% of the Nasdaq. So if Microsoft's down and Apple's down, then you expect the Nasdaq to be down significantly. Take that into account when trading. Also, high growth sector, high growth stocks, high-tech sector, high-growth stocks are going to come off a lot simply because as rates rise, then an investor is going to go to more secure investments like bonds, like gold, like the dollar, and like dividend-paying companies, which are energy stocks. Looking at energy, interesting, if you look at the cycle of oil, oil is on the way back up. So now it's running at around about the $113, $114 a barrel level. I expect it to go much higher to around about the $150 because the war in Ukraine and between Russia and Ukraine is intensifying, with the threat of other countries surrounding it might be pulled into it. And that's going to affect an impact on the price of oil, energy stocks, and soft grains and soft commodities, because Russia and Ukraine is a huge amount of land that produces it's the fifth biggest producer of oil and the second biggest producer of grains in the world. So the price of grains and oil and price of grains and flour and soya is all going to go up, which can be seen when you go to do your Tesco shop or go to Sainsbury's or wherever you go anywhere in the world. So oil is going to go up. That's going to impact on inflation. And this week, talking about inflation, we've got on Tuesday and Wednesday the consumer price index and the producer price index. Now, the consumer price index is the consumer level of inflation. In other words, what the consumer is paying retail at the store in order to get his goods into his basket. Now, that index is based on a basket of goods. However, that basket is around about 100 items, but it's not really enough to give you a true picture of inflation. What inflation is really running at, as I say over and over again, it's running around about the 20, 22%, maybe 25% level, as can be felt when you do your shopping, because inflation is not running at the 7% that they claim in the UK and not 8.5% in the States. It's running a lot higher than that. Simply because there's a lot of goods that are not included in the measure of inflation. As a result of that, well, people or investors or the consumer thinks inflation is 7%. The real cost on the pound in the pocket or the dollar in your pocket is a lot higher. The demand on that particular currency, that particular coin, is much greater than 7 or 8% rise in prices. In fact, tomorrow, what the analysts are expecting, they're expecting a fall in inflation from 8.5% to 8.1% on the back of what? I'm not really sure. Maybe because oil came down in the month of April, and therefore because it came down, that it might have impacted on inflation. But I don't think that's going to be the case. I think inflation is on one way, it's only one way up, and if it does come down, it comes down temporarily for a very short period of time before climbing up again. Producer price index is the measure used by what it costs to actually produce those goods, and that was running at 10% in the last count. And in my opinion, again, the analysts are thinking it's going to come down to about 9.5 or something, or 9.2. I believe that's going to go up, and inflation is only on the way up over the next 2 years. As regards interest rates, in the UK and the US, they're expecting interest rates by the end of the year to be 3.5%. I think that is simply too low and not enough. The central banks aren't doing enough in order to get those interest rates, to get that inflation under control. Look at the 10-year bond. The 10-year bond today is now yielding 3.19%. In other words, bonds are being sold off. Okay, investors are selling bonds because they're looking to get into other types of investments. So the yield is going up. As the price comes down, the yield goes up. So the yield on a 10-year US Treasury is 3.19%. Where would you put your money? Would you want to get 3.19% on your money? Why not? So investors are looking at that and thinking, wow, we can actually do better on this, etc., etc. So that's something to look at. Cryptos, in terms of Bitcoin. I must get a drink. I'm really thirsty, excuse me. Sorry, I was really thirsty. Cryptos, I've been talking Bitcoin down all the way down to $32,000 a coin, and if you look at it today, it's below $34,000, so it's closer to $32,000 when I started quoting Bitcoin back at $48,000. So I think there's going to be a sell-off in the cryptos, and I think Bitcoin now could actually go all the way down to $20,000 a coin. That's it for today. I've done my more than 6 minutes, 7 minutes. It's Mayor Valensky with Driving Markets. Have a good day.